All right, what's going on, team? Hope everyone's doing all right today. So we're going to be covering the basics of a trend in this video. How to identify a bullish trend, a bearish trend, and a sideways or ranging trend. And we'll talk about the impacts that trends can have on our trading strategy and how we can adjust our strategy to make more consistent profits. Okay, so let's keep things very simple at first. Let's also turn off volume. It's just going to muck things up. So when we say something is bullish, all we mean is that prices are going higher with every push higher, obviously. And every time it pulls back, we're making a higher low than the previous low. Okay, so higher highs and higher lows. An uptrend or a bullish trend, okay? And quite often in this series, we're going to refer to our trend as the TMS, okay? The technical market structure. An uptrend or a bullish trend, higher highs and higher lows. Downtrends consisting of lower highs and lower lows, or a bearish trend. And then a sideways trend, or really a lack of a trend, which can also be referred to as a ranging series of price action. And that's when you are sticking between two key levels. And quite often you'll extend above or below one level and quickly come back below, sometimes referred to as a deviation of your range. And so what happens here is the range gets extended. Okay, so now this is the top of your range and this is the bottom, okay? And so it's important to understand this because it's going to pay a lot better to buy dips in an uptrend than in a downtrend, obviously, and it's going to be better to short rips in a downtrend versus in an uptrend. Okay, so knowing your trend or your TMS is one of the most important things that you can do. And eventually you should be able to go look at a chart and within 5 seconds really know what the trend is on any given time frame, on any asset in existence, okay? And there will be different trends across different time frames. You might have a weekly trend that looks like this, which is an uptrend. And then inside of this uptrend on the daily, you might have an uptrend here, a ranging trend, and then a downtrend, and then a ranging trend, and then an uptrend, right? And that scales on each time frame, right? Inside this daily trend, you might have a 4-hour uptrend, and then a 4-hour range, and then a 4-hour downtrend. And it just keeps going deeper. Inside of each of these little pops, you'll have a 1-hour trend. Inside of that, you'll have a 30-minute trend, so on and so forth. And in general, we want to trade with the higher time frame trend, right? Not always, but for the most part, right? If the weekly is in an uptrend, then 9 times out of 10, we want to come in on the daily and be looking for longs. Again, not always, but for the most part, okay? If our monthly trend is down, then most likely if we're trading the weekly, we're going to be looking for shorts, right? And a short is just a bet that price will go lower, right? Just like when you long or purchase an asset, you're betting that you'll be able to sell it in the future for a higher value, okay? Let's get rid of some of that and go back to our price action, and we'll look at a few examples of trends here. So again, keep it simple, guys. Higher highs, higher lows is an uptrend. Lower highs, lower lows is a downtrend, okay? So what do we got here? Looks like at first we have an uptrend, or really zooming out a little bit, at first we have a range where you can see it's identified by, at first, an existing trend, which was a downtrend, lower lows, lower highs. And then we stopped making lower lows here. We popped back up, but then we also topped out here with the lower high. So now we've got higher lows lower highs. And we're just keeping inside of this high and this low. And the best thing to do here is going to be look to be a buyer in the lower half of the trend or of the range, and look to be a seller in the upper half. And the worst thing you can do is try and take a trade directly in the center. That's where we get the least edge, and you're kind of just, sometimes you're kind of just coin flipping on what's going to happen, right? You know, you could look to, let me back up. One good tool here, oops, is the Fibonacci retracement tool. And on TradingView, it's going to typically be the third one down. It looks like a bunch of lines. And what we can do with this is we can go to the top of the range, right? And this is often defined by the highest point before the low is in, okay? And then we'll draw a Fibonacci from the top to the bottom. And let me also get rid of these EMAs. I feel like they're not really that useful just yet. Okay, and when you draw this Fibonacci, you're going to get a whole bunch of levels. Let me extend this out to the right. And again, still using the same anchor points, the top of the range and the bottom, but I'm extending it so we can see the values better. The 0.5 is the level that's equidistant between the top of your Fibonacci and the bottom. This is the center of the range. Some people refer this to as the EQ. This is the place where you're going to have the least edge, right, for the most part. Now, there will be times to take trades here and at the two pivots around it. But quite often, if you try and buy and sell at this level, it's going to be a little bit tricky unless you have some trend direction, okay? So the strategy in a range is to look to be a better buyer at the low end, right, from this fib down to the bottom, and look to be a better seller on this side from this fib to the top of the range. Okay, so pretty good buys down here, pretty good sales up here. And then you can look to take trades as you leave the 50% level. Like you can see here, we test the top of the range, we escape from it for a second, and then we deviate back below. And then we form a little of a bit of an uptrend, and then a little bit of a downtrend. We test the center of the range, which is a good test to see if we're going to start making higher lows, which we've already done one time here in front of the low. Okay, and we make another higher low here. If you were to zoom in, let me see if I can get rid of some of this. Let's just put the fibs back up. If you were to zoom in, again, we're on the 4 hour right now, but let's say you were scalping this around a little bit. Maybe you were, as you moved away from this 50%, maybe you look to get a little bit long on these higher lows, right? And then as you're coming into the top of the range, you'd be looking to take some profits. And then once this little trend kind of starts to die out, this little uptrend, maybe look to get flat until this downtrend is over. And then right here, we have a key pivot, okay? So what's happened here? We can even remove the fibs. Let's try to remember that this is the middle of our range. Okay, we'll put a little line there. I just want to be able to see this a little bit better. Okay, so you have these higher lows that are defining this little intermediate term uptrend here, right? Something like that. Okay, and you're making near term higher highs. This is kind of like your day trade trend. And then here, that changes. Now we put in a lower high relative to this one. And we've also now gone above the top of the range, failed to maintain that breakout. And now we've retested that high right here, failed to get back above it. What we would have liked to see if this was a good breakout is to get above it, either maintain that breakout, or maybe you break back below it one time and then maintain it on the second push. Either of those would be decent longs. You can long the retest of this range high. That's a decent trade. Or once you see this lower high, lower low, you would probably look to stop being on the long side, at least temporarily, okay? Because we now have this new little downtrend here. Okay. Little lower highs. See these little lower highs and lower lows on this near-term trend. And then we stop making lower lows here. We put in a higher low, and then we put in a higher high relative to this near-term trend with this candle. So maybe this is the time on the lower time frame where you come back in and you start to buy again, right? You can buy on this candle, and then we explode through the top of the range, which was previously defined here, and then defined again with this extension here. We wick into it, and then we do basically what I was talking about, what we would have liked to see back here. Okay, instead of breaking above it and then getting rejected, we broke above it, failed to get above it. We kept making higher lows, so our near-term trend continued. And then right here, it's a little bit hard to see, but if we zoom in, you can see on the lower time frame, we broke above it again, retested it, and continued. This would be another good buy. And now, as we move away from this range high, we have a new trend emerging, an uptrend. And at this point, we're going to throw the EMAs back on, or maybe we'll keep them off for now. I just want to turn them on for a second though, and we'll go over indicators and how they can help us in viewing the trend later. But for now, one of the best things that it does for us is it shows us the direction of the trend, and we wouldn't even need the candlesticks. Let me turn off my longer period ones and just show you these moving averages. And again, I'm going to do a whole video on this. I just want to briefly kind of introduce us to the idea of them. The way these EMAs are expanding is showing us the direction of our trend, right? When there's a lot of distance between each EMA, and EMA stands for exponential moving average. Again, don't worry too much about them. We're going to discuss them later. But these are basically averages of price over any given period of time, okay? As they expand, it's showing us our trend is up, which again, we can understand just from the price action. And when they're really tight like this and they don't really have a direction, maybe they're up a little bit, then they're down, then they're up, then down. This is indicative of a range trade, okay? And you can see it looks like we're going to have another range forming up here in between this phase of expansion, another little range, and then another wave of expansion and an uptrend, and then probably another range forming. Now let's get rid of those and see if it shows up on the candles. And what do we know? It does. We have our expansion here while we're trending, and then we form a range in here. We get another uptrend here, and then we range again up here. Right? So hopefully this is making sense, guys. Again, I'm going to try and not overload you yet on exactly how we could go about trading this, but just to introduce you to some simple trades, right? Here was one back here. Oopsies, I got rid of my indicators. I want to save those for later. Right? One good trade might be on seeing this breakout fail and retest the top of this range. You could go short, and then you would look to cover that. And by cover, you buy back what you sold. Say you sold 1 Bitcoin here, right? You'd look to buy that back around the 50% retrace after this downtrend that you're trading in the direction of reverses, which would be somewhere around here. Okay? And then another potential trade here, and in my opinion, a better one because we start to have some trend direction, would be to long the breakout, to buy the breakout above this trend and this retest, as well as the breakout and retest of the new top of the trend, which is right here. And now, as we start to make higher highs and higher lows, versus trying to be more short and sell and being a better seller at the top of the range and a better buyer at the low, we'd be looking to buy on every pullback as long as this uptrend remains, okay? So you'd be looking to maybe add on this dip and this one and all of these subsequent ones until the trend breaks down, which really starts to happen when we lose this level here. And again, some of my drawings might be kind of poor. We're not being super point specific, but you can see in general, we're pushing to higher highs and higher lows, and we form a bit of a range here where we're getting breaks above a level, going back below, breaks above, going back below, until this point we break out of the range, and we're back to an uptrend, higher lows, higher lows, higher lows, higher lows. And then we get a lower high and a lower low. Now we have a new potential downtrend, which really ends up turning into a range, right? And so on and so forth. You would just trade this the same way we talked about trading this range. Now, I think, at least for my trading model, ranges are a bit harder to trade than a trending market. I always think it's easier to trade a trending market because you have some real direction. But I know some people excel very nicely when trading a ranging market. I'm just not really one of them, to be honest. But here you can see we've got a few different trades that could be had, right? Okay, you could trade this break above and reclaim underneath the trade. That could be a decent short back towards the ranged lows. Likewise, I know it doesn't work out, but a decent buy opportunity would be a retest of this range high after breaking out. And keep this in mind, guys. A good setup is not always going to play out in our favor. Good setups will fail. It's all part of the equation. Okay, and we'll show some ways to identify at the earliest possibility when a setup has failed. For example, this candle here, which we'll talk about in the candlestick setup. This is a topping tail. And again, I won't go into too much detail, but essentially, if we were to look in the lower time frames, you would see that this little uptrend we have here since coming lower, this little trend here, actually fails this breakout, and you have a little mini range that forms here, and you lose that on this point. This is the point where this breakout long has failed, and you've re-entered into your bigger picture range, and now you've got a new downtrend consisting of lower highs and lower lows, which ends here, right? And so on and so forth. Now we have a new little uptrend, which to me looks like it might be failing soon with this lower high, and it will be confirmed a new downtrend if we get a lower low. Okay? So we've been going about 20 minutes here. This is a bit longer than I really wanted to go for this video, but understanding the basics of a trend is one of the most important factors and will be something we pay attention to in every video from here on out. So I really wanted to give it plenty of time. And we'll discuss a bunch of different ways how we can use the trend in our favor. But for now, just focus on being able to go to a chart and identify, is this an uptrend, a range, or a downtrend? And eventually, let's pull up some different charts from Bitcoin. You should be able to go into a chart and within about 5 seconds be able to identify what kind of trend exists on all different time frames. For example, we'll just stop on a random one, this one. Okay? So big picture, it looks like we're in a range, right? We've got a near-term uptrend right here, and we've got a lower time frame downtrend or range right here. Okay, so just take some time, go through a bunch of different charts, and see if you can identify what kind of trends exist. And if you ever have any questions or you want me to double check, feel free to reach out to me in Block Circle and I'd be happy to help. So next video, we're going to discuss trend lines. So I will see you guys in that video. Peace out.